right now, the next move on the dollar boils down essentially to this. We have scenario A, where the geopolitical tensions stay heated, okay? Maybe tensions rise even further, the energy disruption gets worse, and as a result of that, the dollar continues higher. The safe haven premium expands. Then we have scenario B. Geopolitics de-escalate, the news cycles comes down, the campaign maybe winds down a little bit, and the result of that, energy prices come down, and as a result of that as well, the dollar fades back, okay? Now, what am I trying to say here? It's a simple scenario. We got scenario A, the dollar goes up, scenario B, the dollar goes down. So now you might be thinking, well, I've said nothing useful here because I said the market can go up and the market can go down. Fantastic. But now comes the real part. This is where the real fundamental analysis starts. Because now this becomes about probabilities. Okay, we've established the two scenarios. And now we need to understand and analyze the world. We need to understand and analyze the geopolitical context, literally the evolution of the geopolitical context from here to determine which scenario is the most likely and at a given moment in time. How do you do that? Well, you build a mental scoreboard, so to speak. We understand, first of all, the story that is driving the trend. Everything started here because right here, the military campaign against Iran from the US began. This sent energy prices higher, and as a result of that, the dollar followed. Now, obviously this started even earlier because, markets movement expectations was getting fairly clear that the geopolitical context was getting pretty heated, but then it actually started here and the trend began. Now, this went on for multiple reasons. Obviously, there's a bit of safe haven inflows in the dollar, which acts as a safe haven. Then you got higher yields in the US, obviously higher yields in the world, but when there's a global tightening event like this, the dollar gets the exceptionalism. And also the US is more insulated to the energy disruption that many other countries don't have, particularly countries in Europe and Asia. They rely heavily on oil prices from the Middle East, on the contrary to the US. So that whole situation created this bullish trend for the dollar. Perfect. What do we do now? We understand the story. We understand what is driving the trend, what started the trend, and what is currently still driving the trend. So the first question to ask, the first practical question to ask from this point forward is the conflict broadening or getting contained? Now, what we're doing here is tracking whether the rhetoric is escalating, whether, the military involvement is expanding, whether, the supply of oil is actually improving or not. This is an important question to ask in order to understand whether this or this is the most likely scenario, okay? And second, the second question actually ties straight into the first question because we need to ask, what is actually oil doing? The oil market is the lie detector in this story, is the actual barometer that tells you whether the market is actually thinking escalating further or whether it's actually thinking that things are de-escalating. Now, here we're looking at oil prices in orange and the dollar index in candlesticks. You can see they're pretty much the same thing. Why? Because they encompass the same geopolitical premium, essentially, okay? If things escalate in the Middle East, the dollar gains, both as a result of higher energy prices, because that means that central banks, including the Federal Reserve, may need to keep rates higher for longer. There's a whole macro logic behind it, but essentially the point is that oil prices and the dollar index are pretty much the same thing in this environment. So the question to ask is obviously, what is oil doing? Okay, we do all of this, so we ask, whether tension are escalating or not, to understand whether scenario A or scenario B is most likely. We need to understand the probability of each scenario. Based on what? Based on the information that we have about the geopolitical context right now. Now, that can be a little complex, I understand, because the geopolitical context, the news flow is pretty, deceptive at the moment, but this is what we have to deal right now. If geopolitical stress stay elevated, you look for this trend on the dollar to continue. If instead a de-escalation becomes credible, and I mean credible, not just, Trump saying things are going great. We have to see a credible de-escalation. Then we can start to expect this trend to truly begin to unwind. Now, Again, I said this is easier said than done, obviously, because the geopolitical context right now is fairly unpredictable and it's tough to know which geopolitical headline hits next. I understand that. I know that very well because obviously we trade this stuff and we do this publicity as well on the public Telegram channel. If you follow us there, you know we went short Euro USD a couple of weeks ago, anticipating oil prices to stay elevated and the context to stay heated. And we've been proven right for a little bit. I managed to put the stop loss at break even, but then a slightly de-escalated comment yesterday from Trump pivoted the sentiment around and took the trade out at break even. Now, by the way, we're shorting that again with the private network from a bit higher up, because in my opinion, the context has not changed at all and the path of least resistance remains lower on Euro USD. Now, all that said, the point of this video is to show you how the real fundamental analysis is conducted, okay? Because it's about understanding, first of all, what is driving the price, okay? What is the narrative and story that started a trend and is currently driving price? And then as a result of that, evaluate the scenarios ahead. If the narrative continues, in this case, meaning if the context stays the same, so if the geopolitical context stays heated, which keeps energy prices elevated, which keeps oil prices elevated, then the trend for the dollar is most likely going to continue. If instead the geopolitical context pivots around, energy prices start to move lower, the context changes, and the narrative starts to shift, and the premium that got built on the dollar throughout all this time is going to unwind. It will rebalance itself back to where it was before the geopolitical escalation. Now, it may look a little complex, but it's essentially two scenarios. Yes, the geopolitical context stays heated. No, geopolitics instead de-escalate. This is the real fundamental analysis, okay? Build the context, understand the context, understand scenario A, this happens, then this happens. Scenario B, this happens geopolitically, then this happens on the markets. So if this video has given you a more actionable and useful perspective on fundamentals, do me a favor, hit the like button. It tells the YouTube algorithm that we're actually here providing real value for traders.